So, have you ever wondered if the rules for building wealth have just completely changed? I mean, it really feels like it sometimes, right? Well, that's exactly what we're going to dig into today. How those classic old school rules of finance aren't just relevant, they are absolutely essential for grabbing a hold of the massive opportunities in our modern world.
Okay, let's start with a little bit of a puzzle. What in the world does a super detailed, balanced budget have in common with a massive million subscriber YouTube channel? You'd think not much, right? One feels like old discipline and spreadsheets, the other feels like pure creativity and explosive growth. But is that the whole story?
Well, it turns out they have way more in common than you'd think. See, they both rely on the exact same core idea. You just can't build a rocket ship on a shaky launch pad. It's that solid financial foundation that gives you the stability and, honestly, the freedom to go chase those huge modern opportunities, whether that's as a creator, an entrepreneur, or really anything else you can dream up.
So here's our game plan for connecting those dots. First, we're going to lay down the timeless foundation of finance. Then, we'll use that to build what I like to call a financial fortress. From there, we'll jump into a totally modern blueprint for earning. And finally, we'll see how it all comes together in a playbook for today's creators. All right, let's dive right into part one, the foundation. This first piece of the puzzle is all about taking back control. Because let's be real, if you don't have a crystal clear picture of your own financial reality, you're basically building on quicksand. And it all starts right here with budgeting and cash flow. Look, cash flow is just a fancy way of saying you know exactly what money is coming in and what money is going out every single month. It's the bedrock. If you're not tracking it, you are flying completely blind with your finances. Now, this next concept is a total game changer. Not all debt is created equal. You've got good debt, like a low-interest mortgage, which is basically a tool to buy an asset that'll hopefully be worth more later. And then you have bad debt. Think high-interest credit cards used for stuff that loses value. That kind of debt just actively drains your wealth. So the game plan here is pretty simple. Get rid of that bad debt as fast as you possibly can. Okay, so once you get a handle on your cash flow and you've got a plan for your debt, you can switch from playing defense to playing offense. This next stage is all about building that financial fortress, creating some real stability so you can start aiming for long-term growth. The very first wall of your fortress is your emergency fund. And the magic number here? 3 to 6 months. That's the goal. You want 3 to 6 months worth of your essential living expenses tucked away in a savings account you can get to easily. And let's be clear, we are not talking about money for a vacation or a new gadget. This is your financial shield. It's for the absolute must-haves: your rent or mortgage, your utilities, groceries, transportation, all the essentials. This is the money that lets you weather a storm, like a job loss or a surprise expense, without having to rack up more of that high-interest bad debt. Now, with that shield in place, it is time to start building your growth engine. And the fuel for that engine is something called compound interest. This is where things get really exciting. It's not just your money earning interest, it's the interest itself starting to earn its own interest. It's a true snowball effect for your wealth. And just take a look at how this works in practice. See that first bar? That's your initial investment. Yep, it looks pretty small. But notice how the growth isn't a straight line. It starts to curve up and up and up. That's compounding in action. Each year, the snowball gets bigger and it rolls faster. And this, right here, is why the single most powerful ingredient in any investment is just time. Of course, any investment comes with risk, but the smartest way to manage that risk is through diversification. You've probably heard the phrase, don't put all your eggs in one basket, and that's basically it. It's about owning different kinds of assets like stocks and bonds that don't always move in the same direction. So when one zigs, the other one might zag, and that helps smooth out the ride and protect your overall portfolio from big swings. All right, foundation is laid, fortress is built. Now for the really fun part. Let's connect all these timeless, powerful ideas to a very, very modern reality. We're going to use a successful YouTube creator as our case study to see how all these principles play out in the real world right now. So, let's set a big goal for our creator, earning $10,000 a month. For a lot of people, that is a life-changing amount of money. But how on earth is that even possible on a platform like YouTube? Well, here's the secret. It almost never comes from just one single source. It's really a whole portfolio of different income streams. Yeah, you've got your basic ad revenue from views, of course. But then you start layering on top of that. You've got brand sponsorships. You get commissions from affiliate marketing. Maybe you create and sell your own digital course or an ebook. And you even get direct support from your most loyal fans. The truly successful creators build this incredible web, so if any one stream drives up, they're still okay. Okay, this is the moment. This is where it all clicks into place. We're going to look at the modern creator's playbook and see exactly why that financial foundation we spent all that time on in the beginning is actually the secret weapon for winning in today's creator economy. So just think about it. That boring old budgeting skill, for a creator with wildly unpredictable ad revenue, it's everything. It's what allows them to manage those massive swings from month to month. And that emergency fund we talked about, that is the safety net that lets them survive a month when views suddenly tank or a video gets demonetized. And diversification? It's not about stocks and bonds anymore. It's about building those multiple income streams so that one change to the YouTube algorithm can't sink their entire business overnight. You see, every single principle has a direct, modern, and crucial application. And that really is the main takeaway here. The core principles of building wealth, budgeting, saving, investing for the long term, they are absolutely timeless. They've worked for generations. What's changing, and changing at lightning speed, are the blueprints for earning. The ways we can apply those timeless principles are new, and they're evolving every single day. So whether your goal is to build a business, launch a channel, or just crush it in your career, the logic holds true. First, you have to master the foundation. Then, you need to understand the modern blueprint, and once you have both of those, you're ready to get to work. The only question left is, what will you build?